look, whenever you see something that's possibly viable and it's just not really meeting all your rules, you have to be okay with missing it. Like your number one goal is capital protection. You just have to be okay with missing it.
Good morning, my brother.
Hey, Dilly, how's it going?
I mean, what are you seeing coming into today?
It does not look super clean. Yeah, we're in a very complex structure here that it takes a lot of patience and a heavy focus on risk management to make sure that we can make it out alive, or else we're just going to get chopped up. And then when we really get into that really solid environment, we're just going to be, our emotional and mental capital will be depleted. So let me go over my plan. I'll share the 4 hour here. I think we've all been talking about it, this massive range we've been in, ES from 63.70 to 64.95. We had that big drop to start off the week. We reclaimed 64.20s, which was that middle sort of dividing zone. Yesterday, we were ping-ponging between that 64.20s and then this 55.60 that you guys have all talked about, farm as well. And the idea today is like, okay, well, we have broken above that 60 area. Can it now act as support on a pullback? And if so, can it push us out into the top of this overall range that we're in? If it fails again, well, guess what? We're going to go back into yesterday's range. It can totally traverse back down into prior day low, 64.20s, and we can ping pong again back there. Or if we are seeing a true sell off, we'll probably break that.
I think where a lot of traders get caught up, Chris, and I think you're great at this every time you come in here and we get to see it. You're very patient, you're very particular, but are you in the back of your mind also understanding like what kind of environment this is and you're not getting too aggressive on one way or the other because it really has been a range bound tape.
Yeah, it is. I think what's important for many to understand is that when we get these shifts in environment and what worked for you in the past environment, like April to July, if you're not as experienced as one would hope to be, then the rate of adaptation to that environment will be slow. And if you go in with the same size because you've been on a roll and you've been making all these points and you transition into this environment, you're just going to get crushed because you didn't adapt fast enough. You didn't really take time to consider, hey, what's happening here? Maybe the same opportunities were sort of playing out, but you were just getting stopped out and stopped out. If you don't take time to really, on a weekly basis, audit the environment that you're in and how your approach and system is doing, then yes, sizing will be an issue. Your aggressiveness will be an issue. That may lead to over trading. And eventually, when somebody gets to your level, you went through so many cycles that you now can sort of identify. I mean, we all make fun of the Bollinger Bands, but they're a good way to help you gauge the environment when we're trending and not trending and they're contracting. And like you now know, you're not guessing, that the environment has changed and you adapt already because of all that scar tissue, right? Like you said, yeah, the sizing, the aggressiveness has to change. My sizing goes down a bit. I'm more patient. I do a little bit more mean reversion trading in both sides, but I still, have to be disciplined and patient with what I'm looking for and what I'm trading. Now, I did want to make a note regarding what Deli and I were talking that, when you enter these environments right now, I would say it's a complex environment that many maybe not are not used to and they're not really as confident in trading it. Is, you really have to consider these periods as that possible drawdown period, right? I know we all want to make money every day. I know that's our goal, right? But it's just not possible. It's not sustainable to put that kind of pressure on yourself. And you have to really be okay with the drawdown periods because if you're thinking long term and you're looking at sort of like, I look at this as decades. I've already put in a decade. I'm looking to this the rest of my life, but there's going to be periods of inaction regarding your performance. And if that leads to short-term losses, then as long as you have a system, of course, that's going to lead to a possible drawdown period. And your job then is to manage that drawdown to be at least, the least possible drawdown percentage wise. Maybe that's 10%, maybe that's 20%. I know there's a lot of leverage traders here, so maybe that's higher of your account value or you're trading these prop accounts. But you really, if you don't have experience to go through these cycles yet, then you don't understand how it is to trade and live and breathe in a drawdown. You don't know how to regain that drawdown. You don't know the work that goes into that, and you don't know during that period the emotions that you go through. And so you really have to do some work to allow yourself to understand what it is to be in a drawdown and to be okay with being in a drawdown. Of course, again, look, you need to have a consistently profitable strategy in order to be able to be confident in the drawdown. And I would say that these periods, like you guys see me, I'm usually firing longs, when we're in an uptrend because that's the sort of environment that I thrive. I will put on size. I will aggressively trade a directional trend, right? Since I'm a trend follower, obviously when we're developing these trends and we're sort of in a multi-week uptrend or a multi-week downtrend, I do extremely well. In these range periods, I can still make money, so maybe I'll go into a drawdown. But the overall focus for me here is to make sure that I'm patient, make sure that I manage my risk a little tighter, make sure maybe that means a decrease in my position sizing. Maybe that means a decrease in my trading volume. Because what I don't want to experience is a week or multiple weeks of this range bound structure where, I mean, yesterday you saw a perfect example. We opened up, we rallied hard, we were at highest, we rejected hard, and just for the rest of the day, we sold off. And then maybe like in the last hour and a half, we sort of went straight back up again, right? You're not really seeing that in a strong uptrend or a strong downtrend. So this is a lot of mean reversion. And for me as a trend follower, you can imagine that my runners are getting stopped out way more than a one direction market, right? So these are things that I have to adapt. And if I don't adapt, then my losses can be take more to recuperate. My mental and emotional bank account can be replenished. So depleted, I mean. And so you want to make sure that you are focused on your personal parameters of how you apply yourself into the market in order for when that environment does return, you still have that money, right? You didn't lose it. You still have that mental and emotional clarity in order to really succeed. So if that doesn't happen, I have no way to manage my risk, aka wedge, on a trade idea to have a sustainable trend where I can risk one to make three, to make five, etc. So if that doesn't happen, I cannot engage. And you can see here that we're failing. I mean, it was just to me a really high probable failure setup, but I just didn't have my setup. I was waiting for the higher high, higher low, and then for that to be taken out and then move lower. Technically, we did have a higher low, but look at this. This is higher high one. Where's the 9MA? It's over here in yellow. This is the higher low. That's not a proper way for me to engage in because look, that would mean my entry goes here and my stop goes all the way here. That's not a sustainable risk management spread for me because if we come back down here to the bottom of the range and then bounce, well, I didn't really get the chance to really take partials, right? Because we're in the range. So why would I be taking a short 80% of the way into that next area of the range? It doesn't make sense for me from a risk management perspective. So the risk reward is not the same. If we would have created a higher low here, higher high one, higher low one, and then sort of broken that, well, look at that difference here. Your entry's there, your stop is there. Look at that. By the time price comes back down to the other side of the range, you're already well into 2R. That's attractive to me. So if for those reasonings, for that reason, right, like in Shark Tank, my rules of engagement were not met. And so I don't have no FOMO in this. Something I tell the group is that, look, whenever you see something that's possibly viable and it does not really meet all your rules, you have to be okay with missing it. Like your number one goal is capital protection. Like you just have to be okay with missing it. Because, for myself, if this is a sort of like a quieter period, maybe let's say this month, if we're in this sort of structure, then I know that when it's sort of a strong directional move in the markets, that I will do extremely well. And so missing a move during this period doesn't really affect me because I know this is the period where my activity will be lower.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.